Hey, awesome people! Welcome to the channel. Today we're diving headfirst into a topic that's as exciting as it is impactful. Get ready, because we're about to explore how to achieve your financial goals with sustainable investing. In this video, we're going to unravel the world of sustainable investing like never before. You'll discover how to align your investments with the UN's Sustainable Development Goals, learn the ropes of measuring and reducing your investment's carbon footprint, and uncover the hidden dangers of greenwashing in the financial world. But that's not all. We'll also tackle the age-old debate of mutual funds versus ETFs and help you understand the difference between impact investing and sustainable investing. Plus, we've got a treasure trove of insights on finding the best sustainable investment companies and exploring exciting investment options. But here's the deal. This video isn't just about numbers and graphs, it's about making your money matter. So if you're ready to make a positive impact on the world while securing your financial future, don't forget to hit that subscribe button and join our community of change makers. Now, let's get started with the first topic from how to achieve your financial goals with sustainable investing, that is, sustainable investing. First things first, what exactly is sustainable investing? Picture it this way. It's like putting your money into businesses and projects that don't just chase profits, but also actively work towards making the world a better place. It's an investment approach that harmonizes financial growth with positive social and environmental impact. In simpler terms, your money works not just for your wallet, but also for the well-being of our planet and its people. Now, why does sustainable investing matter in the grand scheme of things? Well, the world is facing some significant challenges: climate change, poverty, inequality, you name it. Sustainable investing matters because it's our way of addressing these challenges. It's a proactive step towards being part of the solution, not the problem. When you invest in companies dedicated to sustainable practices, you're essentially contributing to building a more equitable, greener, and socially responsible world. But how can you venture into this impactful realm? How can you align your investment choices with the UN Sustainable Development Goals? It's not rocket science. First off, familiarize yourself with these goals. They're like the world's ultimate to-do list for making the Earth a better place, covering a vast range of issues from clean energy to education and gender equality. These goals are our collective vision for a sustainable future. Once you have a grasp of these goals, identify the ones that resonate deeply with you. Maybe it's clean water and sanitation, affordable and clean energy, or perhaps decent work and economic growth. Your passions and values should be your guiding stars in this journey. Next, start researching companies. Look for businesses that don't just talk the talk, but walk the walk when it comes to these goals. Here's a pro tip. Don't just rely on fancy corporate jargon or glossy brochures. Dive into their actions. Look for companies that have tangible, measurable initiatives towards these goals. Are they reducing their carbon footprint? Are they promoting diversity and equality within their workforce? These are the signs of a company genuinely committed to making a positive impact. When you found your ideal match, it's time to take the plunge. Invest in these companies or funds that mirror your values. Many investment platforms now offer specialized, sustainable investment options, making it easier than ever to put your money where your heart is. Sustainable investing is not just a financial strategy. It's a lifestyle choice, a statement of your values. It matters because it's a powerful way for individuals like you and me to contribute meaningfully to a better world. By aligning your investments with the UN Sustainable Development Goals, you're not just growing your wealth. You're nurturing a planet that future generations can thrive on. So remember, it's not just about the numbers, it's about the impact. Moving on to the next important point from how to achieve your financial goals. With sustainable investing, that is, measuring your carbon footprint. This is a key step for investors who are truly passionate about fighting climate change. So what exactly is a carbon footprint? Well, think of it as your mark on the environment, the total amount of greenhouse gases like carbon dioxide, CO2, and methane, CH4, produced directly and indirectly because of your activities. It's like the environmental trail you leave behind. Calculating your carbon footprint might seem like a complex task, but it's not that complicated. It involves taking a close look at various aspects of your life. Let's break it down step by step. First, let's consider your energy use. This includes the electricity you use at home, the fuel you consume for your car, and even the energy used in producing the items you buy. The more energy you use, especially from fossil fuels like coal, oil, and natural gas, the larger your carbon footprint becomes. Next up, your transportation choices. How often do you drive? And what kind of vehicle do you use? Do you opt for public transport or carpool? Your travel choices significantly impact your carbon footprint. For instance, taking public transit or carpooling with colleagues can reduce your carbon emissions compared to driving alone. Don't forget about your diet. Surprisingly, what you eat matters too. The production and transportation of food contribute to greenhouse gas emissions. So, reducing meat consumption and opting for locally sourced, sustainable foods can shrink your carbon footprint. Now let's talk about waste. Yes, even your trash plays a role. The more waste you generate, the more energy is needed to dispose of it. By recycling, composting, and reducing waste, you can lighten your environmental impact. Now, let's talk about your lifestyle choices. Do you prefer energy-efficient appliances? Are you mindful of water and energy conservation? These daily decisions may seem small, but they add up to either increase or decrease your carbon footprint. But why does all this measuring matter, especially for investors? Well, here's the deal. Climate change is real, and it's one of the most significant challenges of our time. It's causing more frequent and severe weather events, impacting food production, and even leading to rising sea levels. Investors who care about climate change have a unique opportunity to make a difference through their investment choices. When you calculate your carbon footprint, you gain a better understanding of your environmental impact. This knowledge can guide you toward investments that align with your values, investments that actively work to reduce carbon emissions and combat climate change. Moreover, many governments and businesses worldwide are increasingly adopting climate-conscious policies and practices. Companies that are proactive in reducing their carbon emissions are likely to be more resilient in the face of future environmental regulations and market shifts. So, in a nutshell, understanding and measuring your carbon footprint is like shining a light on your contribution to climate change. It's a crucial step for investors who want their money to not just grow, but also to be part of the solution, creating a more sustainable and habitable planet for future generations. All right. Let's move on to the next topic, from how to achieve your financial goals with sustainable investing, that is, the dangers of greenwashing. You might have heard this term before, but what exactly is it? And why should you be concerned? Imagine this. You're looking to invest in a company that claims to be eco-friendly, socially responsible, and all about saving the planet. Sounds great, right? Well, not so fast. This is where greenwashing comes into play. Greenwashing is like putting a shiny green coating on something that's far from environmentally or socially responsible. It's when companies use clever marketing tactics to make themselves appear more sustainable and ethical than they really are. Think of it as a wolf in sheep's clothing. But why should you care about greenwashing? Well, for starters, it's harmful to both your investments and the planet. Let's break it down. First, the how of greenwashing. Companies engage in greenwashing by employing a variety of tactics. One common trick is using vague or misleading language in their advertisements and reports. They might throw around buzzwords like green, eco-friendly, or sustainable without offering concrete evidence of their efforts. It's like trying to sell a lemon by calling it a luxury car. Another sneaky tactic is what we call tokenism. This is when a company highlights one small, eco-friendly aspect of its operations while conveniently ignoring the larger, harmful practices. For example, a fast food chain might boast about using biodegradable straws while ignoring its excessive water waste. And then there's false labeling. Some companies slap eco-friendly labels on their products when they're barely any different from the non-eco-friendly ones. It's like sticking a healthy label on a bag of potato chips and calling it a salad. Now, why is greenwashing harmful? For investors, it's a real risk because it can lead you to make decisions based on misinformation. You might think you're supporting a sustainable cause when, in reality, your money could be fueling environmentally damaging activities. But the harm doesn't stop there. Greenwashing can also undermine genuine sustainability efforts. When companies get away with false claims, it discourages the real change makers from making meaningful improvements. It's like rewarding a student for cheating on a test while others study diligently. So how do you avoid falling into the greenwashing trap and find authentic, sustainable investments? The key is to do your homework. Don't be swayed by catchy slogans or pretty logos. Dig deeper. Look for concrete evidence of a company's sustainability efforts. This includes transparent reporting on their environmental and social impact, verifiable certifications, and a track record of consistent sustainability practices. Consulting independent sources and sustainability ratings can also be a smart move. Organizations like the Global Reporting Initiative, GRI, and the Carbon Disclosure Project, CDP, provide valuable insights into a company's environmental and social performance. Remember, in the world of sustainable investing, it pays to be a skeptic. If something sounds too good to be true, it might just be a case of greenwashing. Stay informed, ask questions, and demand transparency. By doing so, you'll not only protect your investments, but also contribute to a more genuine, sustainable future for all. By the way, if you're enjoying the video so far and want more topics like this, comment the word "more" so I know. All right, let's address a common question in the context of our video: how to achieve your financial goals with sustainable investing. We're going to dig into the differences between mutual funds and ETFs, and which one might be the right fit for your sustainable investment journey. First up, mutual funds. Think of them like a big basket of goodies. When you invest in a mutual fund, you're pooling your money with other investors to buy a diversified portfolio of stocks, bonds, or other assets. This diversification can help spread risk, which can be a good thing for your financial goals. Mutual funds are professionally managed by fund managers who make decisions about what to buy and sell based on the fund's objectives. They're like the conductors of a financial orchestra. Now, let's talk about the perks of mutual funds in the sustainable investing game. They're a great choice if you prefer a hands-off approach. Just invest your money, and the fund manager does the heavy lifting, choosing sustainable companies and assets for you. Plus, they're known for their liquidity. You can usually buy or sell mutual fund shares at the end of the trading day at the net asset value, NAV, price. But there's always a flip side. Mutual funds often come with fees like expense ratios and management fees. These can eat into your returns over time. And remember, they have to distribute capital gains to shareholders, which might trigger taxes for you. Also, some mutual funds may not align with your specific sustainable goals. It's essential to do your research and find funds that match your values. Now let's switch to ETFs, or exchange-traded funds. ETFs are like stocks that represent ownership in a basket of assets, just like mutual funds. They're traded on the stock market throughout the day, so you can buy or sell them at market prices whenever the market is open. ETFs are known for their transparency. You can see their holdings every day. Here's where ETFs can shine in the sustainable investing arena. They offer diversification like mutual funds, but they often come with lower expense ratios. This means more of your money stays invested and works for you. And guess what? ETFs are tax efficient. They don't usually trigger capital gains taxes unless you sell your shares for a profit. However, there's a catch. ETFs don't have a professional manager making investment decisions. They aim to replicate the performance of an index like the S&P 500 or a sustainability-focused index. So if the index goes up, your ETF goes up, but if it goes down, so does your ETF. It's like riding the roller coaster of the market. So how do you choose between mutual funds and ETFs for your sustainable investing journey? Well, it comes down to your preferences and needs. If you want a hands-off approach with professional management and don't mind the potential fees, mutual funds might be your cup of tea. On the other hand, if you prefer transparency, lower costs, and are okay with a more passive approach, ETFs could be your go-to choice. Here's a pro tip: you don't have to choose just one. Many investors create a diversified portfolio that includes both mutual funds and ETFs. This way, you get the best of both worlds, diversification and cost efficiency. The decision between mutual funds and ETFs in your sustainable investing journey boils down to your financial goals, your values, and your comfort level with active or passive management. Whichever route you choose, remember that aligning your investments with your values is a step toward not only achieving your financial goals, but also making a positive impact on the world. And that's a win-win situation. Now let's clarify something that often causes confusion: impact investing versus sustainable investing. These two concepts are closely related, but they have distinct differences, and understanding them is essential on your journey to achieving your financial goals with sustainable investing. You see, this video, How to Achieve Your Financial Goals with Sustainable Investing, is a roadmap for building a financially secure future while making a positive impact on our planet. First, let's break down impact investing. This approach is all about putting your money into businesses, projects, or funds with the primary goal of generating positive social or environmental impacts alongside financial returns. Think of it as a double bottom line: profit and purpose. For instance, you might invest in a company that aims to provide clean drinking water to underserved communities, or one that's committed to reducing plastic waste in our oceans. Impact investing directly targets specific issues, and it's like a direct punch in the fight for a better world. On the other hand, sustainable investing, as we've discussed earlier, encompasses a broader spectrum. It involves putting your money into companies or projects that not only generate returns, but also adhere to environmental, social, and governance (ESG) criteria. These criteria cover a wide range of factors, including ethical business practices, resource management, employee well-being, and more. Now, here's the key distinction. Sustainable investing doesn't necessarily require that the investments directly address a specific issue, like clean water or plastic waste. Instead, it focuses on the overall sustainability and responsibility of the investments. It's about ensuring that the companies you invest in operate ethically and with a long-term view. So, to put it simply, impact investing is like a targeted mission. You're putting your money where it matters most, addressing specific issues close to your heart. It's like using a magnifying glass to concentrate the sunlight on a specific spot. It's not just about amassing wealth. It's about doing so while leaving a positive mark on society and the environment. When you align your investments with sustainable investing principles, you're not limited to one specific cause. You're contributing to the broader goals of sustainability and responsibility. In a way, it's like a toolbox filled with various tools, each designed for a specific task. Impact investing is one of those tools, suited for targeted missions, while sustainable investing serves as your well-rounded toolkit for building a better financial future and a better world simultaneously. Remember that there's no right or wrong choice between impact and sustainable investing. It's more about finding the right balance that aligns with your values and financial goals. You can even combine both approaches to create a diversified and impactful investment portfolio. So, when you embark on your journey, keep in mind that you're not just investing for yourself, you're investing in a brighter, more sustainable future for everyone. And that, my friends, is a truly noble pursuit that can lead to financial success and positive change. All right, guys, now that we've got a solid grasp of the sustainable investing landscape, let's dig deeper into the exciting world of authentic opportunities. You see, the real magic of how to achieve your financial goals with sustainable investing lies in finding those authentic gems that align with your values and financial objectives. So, how do you go about uncovering these opportunities? Well, it's not as complex as it may seem. Let's break it down. First, take a close look at your own values and priorities. Ask yourself, what causes or issues do I care deeply about? Maybe it's clean energy, affordable healthcare, or education for underprivileged communities. Identifying your passions will help you narrow down your focus. Now, with your values as your compass, start researching companies and projects that resonate with your chosen causes. You'll be pleasantly surprised to find that many businesses are already making significant strides in these areas. Next, evaluate the companies you're interested in. Look beyond the surface and assess their commitment to sustainability. Check their track record in environmental, social, and governance (ESG) practices. This tells you how they're managing their impact on the planet, their employees, and their governance structure. But here's the secret sauce. Don't stop at their reports and statements. Engage with them. Reach out to their investor relations teams, attend shareholder meetings, or follow their social media channels. This gives you a first-hand feel of their dedication to sustainability. After all, actions speak louder than words. Remember, the goal is to make investments that not only grow your wealth, but also create a positive ripple effect in the world. It's all about being part of a larger movement towards a more sustainable and equitable future. Think of it as a win-win scenario. Your investments have the potential to grow, securing your financial future, while at the same time, they contribute to addressing critical global challenges. It's a powerful combination that empowers you to be a force for good without compromising your financial objectives. So, in a nutshell, uncovering authentic opportunities in sustainable investing boils down to aligning your values with your investment choices, researching, engaging with companies, and staying true to your financial goals. This synergy is the key to making a difference while securing your financial future, a true testament to the power of sustainable investing. All right, now, let's get down to the nitty-gritty of finding the best sustainable investing companies. Remember, our goal here is to align our investments with positive impacts on society and the environment. So, how do we find these companies that walk the talk? Well, it starts with doing some research and looking for those that resonate with your values and financial goals. As we continue our journey on how to achieve your financial goals with sustainable investing, let's explore some examples of companies that excel in this field. One standout example is Tesla. You've probably heard of this electric vehicle pioneer. Tesla not only aims to revolutionize the auto industry with clean energy vehicles, but also strives to transition the world to sustainable energy. Investing in Tesla means you're supporting a company that's making substantial strides toward a greener future. Another remarkable company is Apple. This tech giant is committed to using 100% renewable energy in all its operations. They're also investing in innovative recycling programs and working on reducing their carbon footprint. When you invest in Apple, you're investing in a company that values sustainability. Moving on, let's talk about Unilever. They're a global consumer goods company with a clear sustainability agenda. Unilever's sustainable living plan focuses on improving health and well-being, reducing environmental impact, and enhancing livelihoods. By investing in Unilever, you're supporting a company that aims to make a positive impact on people's lives. Now, let's not forget Microsoft. This tech giant has set ambitious goals to become carbon negative by 2030. They're investing in carbon removal technology and are committed to addressing their historical carbon emissions. When you invest in Microsoft, you're backing a company dedicated to reversing the effects of climate change. We've also got Waste Management on our list. They might not be the first company that comes to mind, but they're a sustainability powerhouse. Waste Management focuses on recycling, renewable energy, and waste reduction. Investing in them means you're supporting a cleaner, greener planet. So remember that these companies are just a few shining examples. There are many more out there waiting for you to discover and invest in. Keep your eyes open, do your research, and let your investments reflect your commitment to a sustainable future. Now let's embark on an exciting journey through exploring various investment options that harmonize perfectly with the principles of sustainable investing. You might be asking, how can I make my investments both eco-friendly and profitable? Well, we've got some answers for you. Picture this. You're standing at a crossroads, ready to make a meaningful choice with your money. Here are some paths you can explore. Imagine investing in companies or projects that harness clean and renewable sources of energy. Think of those massive wind turbines, gracefully spinning in the breeze, or solar panels soaking up the sun's rays. Sustainable investing lets you become a part of these ventures. By supporting renewable energy, you not only contribute to a greener planet, but also tap into a sector with promising growth potential. Now let's talk about green bonds. These are not your typical financial bonds. They're the heroes of the environmentally conscious. Green bonds are issued by governments, corporations, or organizations with a noble mission to finance projects or activities that have positive environmental or climate benefits. When you invest in green bonds, you're not just earning returns, you're helping fund initiatives like afforestation, clean water projects, or sustainable transportation. Your money becomes a force for good. Next up, social impact investing. This one tugs at the heartstrings. Imagine your investments making a real difference in underserved or marginalized communities. It's about supporting companies or funds that aim to create positive social outcomes. We're talking about improving access to healthcare, education, financial services, or affordable housing. These investments bring about positive change while potentially padding your pockets. But wait, there's more. Speaking of how to achieve your financial goals with sustainable investing, let's not forget that these investment options aren't just about sustainability. They're about building wealth with a conscience. When you invest in renewable energy, you're not just generating electricity. You're generating opportunities for your portfolio to grow sustainably. Green bonds aren't just a financial instrument. They're a ticket to a more equitable and eco-friendly future. Social impact investments aren't just about returns. They're about returns that come with a sense of fulfillment and contribution. So there you have it, our exploration of investment options under the umbrella of sustainable investing. These paths offer not only financial potential, but also a chance to leave a positive mark on our world. Now, the choice is yours. Which road will you take on your journey towards achieving your financial goals with sustainable investing? Now, let's get into the wisdom of The Art of Long-Term Performance by Carrie Krasinski and Nick Robbins. This book isn't just about investing, it's about shaping your financial future in a way that resonates with your values and the planet's well-being. The authors here take us on a journey, much like our own pursuit of sustainable investing. They emphasize that it's not just about quick wins, it's about creating a lasting impact with your investments. Think of it as a marathon rather than a sprint towards your financial goals. And this perfectly aligns with our video today, How to Achieve Your Financial Goals with Sustainable Investing. In their insightful book, Krasinski and Robbins explain the importance of patience and the long view. They teach us that sustainable investing isn't just about selecting the right companies, it's also about holding on to those investments for the long haul. You see, sustainable investing is like planting a tree. You nurture it, watch it grow, and in the end, you enjoy the shade it provides. One key takeaway from The Art of Long-Term Performance is the concept of ESG integration. ESG stands for Environmental, Social, and Governance Factors. These are the criteria that help us evaluate a company's sustainability and ethical impact. Krasinski and Robbins encourage us to look beyond financial metrics and consider these ESG factors when making investment decisions. But how does this tie into achieving our financial goals with sustainable investing, you may ask? Well, think about it this way. Companies with strong ESG practices tend to be more resilient and better equipped to weather economic storms. By aligning your portfolio with such companies, you're not only contributing to a better world, but also potentially enhancing your financial stability. The book also introduces us to the idea of impact investing. Now, this isn't a new term for us, but it's worth revisiting in the context of long-term performance. Impact investing focuses on generating measurable social and environmental benefits alongside financial returns. So by integrating impact investments into your portfolio, you're not only striving for financial success, but also actively participating in positive change. The lessons from The Art of Long-Term Performance reinforce that achieving your financial goals isn't about rushing into investments without thought. It's about deliberate, sustainable choices that can lead to a prosperous and purpose-driven future. This book reminds us that sustainable investing isn't a fad, it's a philosophy. It's about aligning your wealth with your values and patiently watching it grow over time. So, as we navigate our journey toward financial success through sustainable investing, let's remember the lessons from The Art of Long-Term Performance, that the path may be longer, but the rewards are not just monetary, they're meaningful, both for us and the world we live in. All right, Now let's move on to The Wisdom from Purpose and Profit by George Serafeim, the next book from How to Achieve Your Financial Goals with Sustainable Investing. This book takes us on a journey that's both enlightening and actionable. It's all about how businesses can be a force for good while still achieving profitability. Let's break it down in simple terms. You see, the traditional view of business often centers solely around making money. But Purpose and Profit challenges that notion. It asks businesses to consider their impact on society and the environment. It's not just about the bottom line. It's about the triple bottom line people, planet, and profit. In this book, Serafeim introduces the concept of shared value. It's about businesses finding opportunities to create value for society while also creating value for themselves. It's a win-win approach. Let's put it this way. Imagine a company that manufactures eco-friendly products. By doing so, they're not only making a profit but also reducing environmental harm. This is a shared value in action. But it's not just about good intentions. It's about measurement and accountability. Purpose and Profit emphasizes the importance of tracking and reporting on your social and environmental impact. This isn't just good reporting, it's about making informed decisions and ensuring that your actions align with your values. One key takeaway from the book is the idea of stakeholder capitalism. Instead of just focusing on shareholders, businesses should consider the interest of all stakeholders, employees, customers, suppliers, and the community. It's about building long-term, mutually beneficial relationships. Now, you might be wondering, how does this relate to my investments? Well, it's simple. When you invest in companies that embrace stakeholder capitalism and shared value, you're not just seeking financial returns, you're supporting businesses that are committed to making a positive impact on society. The book also dives into the power of transparency. It encourages businesses to be open and honest about their actions and their impact. This transparency builds trust with stakeholders and investors alike. When you invest in transparent companies, you can have confidence that your money is being used responsibly. Sustainability is a buzzword these days, but Purpose and Profit offers a practical roadmap for businesses to truly embed sustainability into their DNA. It's not about superficial changes, it's about deep, meaningful shifts in how businesses operate. Another gem from the book is the concept of impact-weighted accounting. It's a way of accounting for a company's social and environmental impact alongside its financial performance. This isn't just a theoretical idea, it's something that's gaining traction in the corporate world. When you invest in companies that adopt impact-weighted accounting, you're supporting a more holistic approach to business success. In essence, Purpose and Profit reminds us that business can be a powerful force for positive change. It encourages us to think beyond short-term profits and consider the long-term implications of our investments. It challenges businesses to be not just wealth creators, but also value creators. So as you embark on your sustainable investing journey, remember the lessons from Purpose and Profit. Seek out companies that embrace purpose alongside profit, that practice stakeholder capitalism, and that are transparent about their actions. By doing so, you'll not only grow your wealth, but also contribute to a more sustainable and equitable world. There you have it, guys. A comprehensive journey through sustainable investing. We've covered everything you need to know about sustainable investing. Remember, it's not just about growing your wealth, it's about doing good for our planet and society. This video is for educational purposes only and does not constitute investment advice. It is important to conduct thorough research and consult with financial professionals before making any investment decisions. The value of investments can fluctuate, and past performance is not indicative of future results. Always assess your risk tolerance and investment goals before allocating your capital. I recommend you watch the next video in our series. Don't hesitate to share this video, subscribe to our channel, and share your thoughts in the comments section. Thanks for watching, and I'll see you in my next video.